price of gasoline at not much more than $2 a gallon in this country, I think this could be a terrific year for the theme park operators because when it costs a lot less to drive, people are much more likely to spend an hour or two on the road, get to their closest theme park for some family fun. And the largest regional theme park operator in the world is Six Flags, 18 regional parks located throughout North America. So I expect it to be a major beneficiary of lower oil once the weather starts to get warmer and its parks hit their peak time of the year over the summer. Plus, while this stock, a long-time favorite, has been roaring for ages, giving you a 34% return with dividends just since we spoke to the CEO roughly 4 months ago, Six Flags still sports a bountiful 4.5% dividend at these levels. Now, that yield, of course, goes down if the stock goes higher, which I think it's going to after this quarter. It just reported a very strong quarter after the close, delivering better than expected earnings, higher than anticipated revenue, rose 19% year over year, 15% increase in attendance. These are staggering numbers, guys. Let's take a closer look with Jim Reid-Anderson, the chairman and CEO of Six Flags. Hear more about the quarter and where his company's headed. Mr. Reid-Anderson, welcome back to Mad Money. Good to see you, sir.
Great to be back, Jim. How are you?
You guys are innovating technologically. You're innovating new coasters, but you're also innovating the guest experience. And it's clear from these numbers, it's really working.
It really is working. And I think we've talked about news in every park every year. We've done that. We've provided some new rides, some new experience for our guests. That's from a capital perspective. But in addition, we've provided new opportunities, such as our all-season dining pass.
People love biometrics. They love that.
They love it because we put them in the position where they can eat a lunch and a dinner at the park anytime they come once they have a season pass. And that's been spectacular.
Yeah, I know
Jim.
that works. People love it. Biometrics?
Yep, the ability to go in and scan your finger, in essence, as you enter the park, rather than always having to show your card. That we've introduced as well. And last year, Jim, we were the only theme park company in the world to make Information's Week top 100 innovators. And I'm very proud of that.
Now, are they innovating on customers or innovating on the coasters? Because every year I notice you put new rides in, which gives you a reason to come back.
We do. We try to do it all. We try to innovate in ways that will make our guests happy, because that's our focus. But definitely on the ride front, no one is better than Six Flags at innovating. And I will tell you, I know for sure, this year, 2015, we have the best lineup of product in our company's 54-year history.
And you're not even counting on the tailwind of gasoline. I noticed when I looked through the release, it's really just the traffic figures were already up well before gasoline came down. 7% increase in admission revenue, 3% increase in sales inside the parks. People are spending when they're there.
Absolutely. We've seen increases at every level. And inside the parks, people are spending. I still believe it's a little bit of a tough economy, so I'm not saying, okay, this is a great economy. I believe it is tough for people, but we provide a value offering. And as a result, people want to come back over and over. The $2, that's a good place to be, but we don't know where it'll be in the summer when we have our peak. And when prices were higher at $4 or so, we saw no real negative impact. So my view is, it's nice that they have more disposable income. That's a good thing. And I'm hoping they spend it at our parks, but we don't count on it.
I think people only know Disney and they know Six Flags, and they know them overseas. And I look at the international picture of what you guys are doing, and I can imagine that we should be 5 years from now not thinking about this as just a purely domestic company.
It's definitely a major leg of our growth strategy. We've, as you know, got 2 partners already, and we're working on multiple partners in other areas of the world. And we think this will be a great growth engine in China, in the Middle East, but also in other places we're looking. And I think it'll be a major growth engine for the company. While at the same time, I've told you before, pricing for us is an opportunity down the road. Our season pass penetration, we know we can grow that further. All season dining. These are areas where we can continue to grow.
But we're stock guys, and in the end, what I think is most impressive is that this was a company that had to reorganize. You're about cash. You're about cash flow. You're about return money to shareholders. Well, look, if it was just rides, frankly, it'd be nice to see it. But it's about the return to shareholders that you're really focused on.
Absolutely. In our return, we're up 6-fold in the last 4 years.
It's not bad, man.
And you quoted what had happened just in the last few months. I would tell you, we're both a growth and a yield company. We grew, in the last 4 years, our cash earnings per share is up 3 times the S&P 500 rate. Our yield is 2 to 3 times the S&P 500 rate. We're focused on driving cash flow. Last year, we got $2.63 in cash EPS. Our growth by 2017 is to be at around $3.75.
Yeah, I like the
We're
600.
definitely focused on that.
The program is right. I think it's also very interesting. You put out something great about the S&P. Most of the stocks that yield 4 to 5% have no growth at all, or they actually have negative growth. And they look like they're attractive, but they're traps. It's very unusual able to see your situation. And I should say, I mean, you make no bones about it. You expect that dividend to go higher.
Our goal is to continue to take the dividend up and to continue to buy back shares so that we look at investing everything we need to into the company, and every single excess dollar goes back to the shareholders. So, Jim, here's a data point for you. We have returned $1.5 billion to shareholders in 4 years. That is double the value of the company 4.5 years ago. And we still have a huge value that's remaining. So our goal is to make sure our shareholders do very well.
Great growth and great yield. I can't find it anywhere else other than these theme parks, of which Six Flags is exemplary. Thank you so much
Thanks,
to Jim Reid-Anderson, the chairman and CEO of Six Flags. They did it again, guys. Another fantastic quarter. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.